Your CPP, OAS, or GIS payment could be suspended, not reduced, suspended entirely, and most seniors who lose it have no idea they did anything wrong. If you are receiving any Canadian pension benefit right now, stop what you are doing because what comes next directly affects whether your money arrives on time this spring or disappears for months while you wait for it to come back. We are in the final days of April 2026. There are 5 specific actions every Canadian senior must complete before April 30th. Not before summer, not before the end of the month in a general sense. Before April 30th, which is a Thursday, there is no weekend buffer, there is no grace period, and if even one of these steps is missed, the consequences can range from a delayed payment to a complete suspension of benefits you have spent your entire working life earning. I am going to walk you through all 5 right now with the exact numbers and the exact steps that matter. The first action, and the most urgent one on this entire list, is filing your 2025 income tax return before April 30th. This is not just a tax obligation. For Canadian seniors, it is the direct mechanism that determines whether your guaranteed income supplement continues, increases, or disappears entirely starting in July. Here is how it works. Service Canada recalculates GIS eligibility every single year. The renewal for the benefit year running from July 2026 through June 2027 will be based entirely on your 2025 income tax return. If your return is not filed before April 30th, Service Canada will not have the income data it needs, and when that data is missing, they do not estimate, they do not assume, they stop your payments. The system is not designed to give you the benefit of the doubt. It is designed to process filed returns. If yours is not there, the result is a suspension. Every year, approximately 4% of eligible seniors across Canada lose their GIS. Not because they became ineligible, but because they did not file on time. 4% sounds like a small number until you think about what GIS means in real dollar terms. Right now in 2026, a single low-income senior receiving full old-age security can receive up to $1,851 every single month when OAS and GIS are combined. That money is tax-free. It pays for groceries, for heat, for medication, for the monthly expenses that do not pause because a government file is incomplete. If your GIS is suspended because your tax return was not filed, you could go without more than $1,100 a month for weeks or even months while the situation is corrected. That is not a temporary inconvenience. For a senior on a fixed income, that is a genuine financial emergency. If your income comes primarily from CPP, OAS, or a small pension, you may qualify for the CRA's free Simple File service, which opened on March 9th of this year and allows eligible Canadians to file quickly by phone or online. If you received an invitation through your CRA My account or by mail, you can use it right now. If you were not invited, check the CRA website to see if you still qualify based on your income and tax situation. The Community Volunteer Income Tax Program, known as CVITP, is another free option. Trained volunteers are available in communities across the country to help eligible seniors file at no cost. Many of these clinics are still running in April. Call the CRA at 1-800-959-8281 or visit canada.ca to find a location near you. There is no excuse to let April 30th pass when these resources exist specifically for you. And if the fear of owing money has kept you from filing, understand this. The tax cut that took effect in July 2025 reduced the lowest federal income tax rate from 15% to 14%. The effective rate for your full 2025 return is 14.5%. You may owe less than you think. Filing late costs more than whatever the bill is. Late filing penalties begin immediately on May 1st, and they compound. The second action every senior must take before April 30th is to confirm that your personal information on file with Service Canada is current and accurate. specifically your mailing address, your direct deposit banking details, and your contact information. This step is underestimated by almost everyone, and it causes real preventable harm every single year across every province in this country. The next OAS and GIS payment for April 2026 is scheduled for April 28th. That is 2 days before the tax deadline. If your banking information is wrong or outdated, that payment will fail. If your mailing address has changed and Service Canada was not directly notified, a check will be sent somewhere you no longer live. Recovering a failed or misdirected payment takes time that seniors depending on that income to pay end-of-month bills simply do not have. Rent, utilities, prescriptions, these do not wait for a government system to catch up. Service Canada does not update automatically when you move or when you change banks. You must provide that information directly. You can do it online through your My Service Canada account, by phone at 1-800-277-9914, or by visiting a Service Canada Centre in person. This takes minutes. The consequences of skipping it can last weeks. If you moved in the last 12 months, changed your bank account, or opened a new account anywhere, treat this as urgent. While you are in your account, also take a moment to verify your current payment amounts. For the second quarter of 2026, which runs from April through June, OAS increased by 0.1%. This follows the 0.3% increase that was applied in January through March. Over the past 12 months, OAS has increased by 2.1% in total. These adjustments are automatic for current recipients, but if you recently enrolled or if there have been any changes to your account, confirm that your payment reflects the updated rate. A few minutes of verification now can prevent weeks of follow-up later. The third action is to review your GIS eligibility in light of any changes to your income in 2025. This step deserves specific attention separate from the tax filing discussion because many seniors are either not receiving GIS at all when they qualify, or they are receiving a reduced amount that no longer reflects their actual financial situation. The Guaranteed Income Supplement is a non-taxable monthly payment for low-income seniors already receiving old age security. As of the current quarter in 2026, a single senior can receive up to $1,874 per month on top of their OAS. To qualify as a single senior, your annual income excluding OAS must be below approximately $22,000. For couples, the thresholds differ based on whether both partners are receiving OAS. If your income in 2025 was lower than in 2024, perhaps because you fully retired, because part-time work ended, because a one-time investment gain did not repeat, or because you lost a spouse, you may now qualify for more GIS than you were previously receiving. But Service Canada cannot make that adjustment until your 2025 tax return has been processed. Filing your taxes and protecting your GIS are not two separate tasks. They are one continuous action. One enables the other. It is also worth understanding how CPP interacts with GIS, because for every dollar of CPP income you receive, your GIS is reduced by roughly 50 cents. Seniors with higher CPP amounts will receive less GIS. Seniors with very low CPP or no CPP may receive the maximum GIS amount. This relationship matters for decisions about when to begin CPP and how to project your total monthly federal income realistically. If you are still in the planning stage, understanding this interaction before you make a CPP start date decision could meaningfully affect how much you receive every month for the rest of your life. The fourth action before April 30th is to confirm that your OAS payment amount is accurate and that all entitlements specific to your age and circumstances are properly reflected on your file. There are two situations that affect a significant number of Canadian seniors, and both deserve direct attention. The first is the permanent 10% OAS enhancement for seniors aged 75 and older. This increase was introduced in July 2022. It is not temporary and it is not optional. It is supposed to be automatic, but it must be correctly applied to your individual file and errors do occur. The current maximum OAS for seniors age 65 to 74 is $742.31 per month. For seniors who are 75 and older, that amount rises to $860.54 per month. If you turn 75 at any point and have not seen your OAS reflect this higher amount, call Service Canada at 1-800-277-9914 and ask specifically whether the age enhancement has been applied to your account. Do not assume it was done correctly. The second situation involves seniors who have deferred their OAS beyond age 65. Deferring is a legitimate choice that increases your monthly benefit by 0.6% for every month you delay past 65, up to a maximum increase of 36% at age 70. If you have elected to defer, confirm through your My Service Canada account that the deferral is properly on record and that the correct enhanced amount is ready to begin at your chosen start date. If you are past age 65 and have not yet applied for OAS at all, contact Service Canada now. In certain circumstances, you may be eligible for retroactive OAS payments covering up to 11 months, but only if you specifically request it and meet the qualifying conditions. For seniors with higher incomes, understanding the OAS clawback thresholds for 2026 is also important, particularly if you are still finalizing your 2025 tax return. The OAS recovery tax begins when your net world income exceeds $93,454. For every dollar above that threshold, 15 cents is recovered from your OAS. For seniors age 65 to 74, OAS is fully recovered when income reaches $154,753. For seniors 75 and older, the upper threshold is $160,696. If your 2025 income is approaching the lower threshold and you have not yet filed, speaking with a tax professional before April 30th about strategies such as pension income splitting, RRSP or RRIF timing, or charitable donations may still reduce your reportable net income in a way that protects some or all of your OAS. The fifth action is to review your CPP payment for accuracy and determine whether any additional entitlements apply to your specific situation. CPP increased by 2% effective January 1st of this year. Unlike OAS, which adjusts quarterly, CPP is reviewed annually, and the new rate holds for the full calendar year. This means the amount you are receiving right now should already reflect that 2% increase from January. The maximum monthly CPP retirement pension for someone beginning at age 65 with a complete contribution history is approximately $1,300 per month for 2026. The average received by Canadian retirees is typically between $750 and $900 per month, because most people did not contribute at the maximum level throughout their entire career. If your monthly CPP is near or above the average, it is still worth verifying through your account that the current amount is correct. There are two specific provisions that may mean your CPP is lower than it should be, and both are correctable. The first is the post-retirement benefit. If you return to work after starting CPP and were under the age of 70, both you and your employer would have continued making CPP contributions. Those ongoing contributions generate additional monthly payments called post-retirement benefits that should be added to your existing CPP amount on an annual basis. If you worked after beginning CPP and your monthly amount has never increased from its original level, contact Service Canada and ask specifically whether your post-retirement benefits have been calculated and applied to your account. The second is the child rearing dropout provision. If you stepped away from the workforce before 1994 to care for children under age 7, those years of low or zero earnings can be excluded from the calculation of your average lifetime earnings for CPP purposes. Removing those years raises your calculated average and can increase your monthly CPP amount meaningfully. If this applies to your history and was not factored into your original CPP calculation, you may have been receiving less than you are owed for years. Call Service Canada and ask them specifically to review whether the child rearing dropout provision has been applied to your file. For seniors who have not yet started CPP and are weighing the timing, the April deadline is a useful prompt. Taking CPP before age 65 reduces your payment by 0.6% for every month before your 65th birthday, for a maximum reduction of 36% at age 60. Waiting past 65 increases your payment by 0.7% per month for a maximum gain of 42% at age 70. The right choice depends on your health, your other income sources, and your personal financial goals. A Service Canada representative or a licensed financial advisor can help you model the numbers for your specific situation before you make a permanent decision. There is one additional matter to address before closing, and it applies specifically to surviving spouses. If you lost a partner who was contributing to CPP, you may be entitled to the CPP survivor's pension. This is a monthly benefit paid to the surviving spouse or common law partner of a deceased CPP contributor. It is not issued automatically. You must apply. Every month you wait to apply is income you are not receiving. Additionally, if you are a surviving spouse between the ages of 60 and 64 with a lower income, you may qualify for the allowance for the survivor under the Old Age Security Program. This benefit is specifically designed for widows and widowers in that age window who are not yet eligible for OAS, and it can provide a meaningful and necessary monthly income during one of the most financially difficult periods a person can face. Contact Service Canada as soon as possible if any of this applies to your situation. These benefits do not arrive on their own. You have to ask for them. One final item that directly connects tax filing to your ongoing benefit coverage. If you are currently enrolled in the Canadian Dental Care Plan, your coverage requires annual renewal. The renewal window for the current cycle runs from April 15th through June 1st, 2026. But here is the important detail. You can only renew after your 2025 tax return has been filed and your notice of assessment from the CRA has been issued. If you miss the April 30th filing deadline and your notice of assessment does not arrive before June 1st, you risk losing your dental coverage for the upcoming year. For seniors who depend on this plan for checkups, cleanings, and other dental work, a lapse in coverage is not a minor inconvenience. It is a gap in care that can affect your health and result in out-of-pocket costs that are difficult to absorb on a fixed income. Let me bring all 5 actions together one final time so you have them clearly in mind. 1. File your 2025 income tax return before April 30th, 2026. It directly determines your GIS eligibility and payment amount for the benefit year starting in July. 2. Confirm your mailing address and direct deposit banking details with Service Canada so your April 28th payment and all future payments arrive without interruption. 3. Review your GIS situation in light of any income changes in 2025. A lower income last year may mean you now qualify for significantly more than you are currently receiving. 4. Confirm your OAS is accurate, including the 10% age enhancement if you are 75 or older, and understand the clawback thresholds if your income is approaching $93,454. 5. Review your CPP for accuracy, check whether the post-retirement benefit or child rearing dropout provision applies to you, and if you have not yet started CPP, make that decision an informed one. These 5 steps are within reach of every Canadian senior. They do not require legal knowledge or financial expertise. They require your attention in the next few days. And taking them means receiving every dollar of retirement income you have earned and are fully entitled to receive. If you are caring for an elderly parent, a grandparent, or an older neighbor who receives Canadian pension benefits, please share this with them today. Help them make one of these phone calls. Sit with them while they log into their Service Canada account. Bring them to a CVITP clinic if they need help filing. Many seniors miss payments or receive less than they should for years, not because the system failed them, but because no one told them what needed to be done or when it needed to happen. Your help this week could protect thousands of dollars of income they are fully entitled to. If you have a question about your GIS situation, about a payment amount that seems incorrect, about a CPP adjustment, or about what benefits a surviving spouse may be eligible for, write it in the comments below. Every comment is read and responses are provided. You are not navigating the system alone, and your question may be exactly what another senior in the same situation needed to see answered. If you want to receive accurate, plain language updates every time something important changes with CPP, OAS, GIS, or other Canadian senior benefits, subscribe now. These programs change throughout the year. Deadlines shift, payment amounts are adjusted. When those changes happen, you deserve to hear about them in straightforward terms, grounded in what the government has actually confirmed, not rumors, not speculation, not fear. This is Canada Pension Vault.